From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli.
And I'm Nadine Blaney. It's a pleasure to be here with you and you. We've got an expert guest standing by as per usual. Juliette, we hit record heights yesterday. I think we need to hold on to that, don't we?
We do. We just interrupted a conversation about Pilates to talk markets. And it's a little bit like that, limbering up, and then we sort of came back down again. But that was really to do with what we've been seeing in some of the commodities market. So looking like we're going to end the trade down by about 0.4%, coming off those records.
Coming off those record highs. But what goes up, potentially must come down. Is this a healthy breather? Do we reset for the next leg up? We'll be discussing that in the next 15-20 minutes or so.
Yeah, and evolution's evolution. The gold miner coming out with an update today. We'll get into that in a little bit more detail in some of our corporate stories, but it's just a really interesting thematic, I guess, on the overall gold market too, and some of these smaller producers that are doing very well. I know evolution is a lot of our guest pick in the space.
Well, I had a good small cap chat with Philip Huddock from Maple Brown Abbott, and he gave me not just a company that does have some gold exposure, but he actually talked about it in the context of a defense theme, but also he gave me a small cap gold miner that he likes. So you can find that online, ausbiz.com.au.
Yeah, and we just played it just before, so those listening already know. But yes, of course, it is online. Jobs Day Eve, though, we are looking out for that. It's kind of the only Jobs Day Eve. This is when you know you're struggling to come up with some exciting thematics.
Look, that will be an instructive jobs read. I had a chat with Scuddy earlier today. That's online as well. Just talking about what could potentially trigger talk of a cut coming from the RBA and the jobs read. And right around the world, jobs have become ground zero, so to speak, for central banks and their next policy move. So I do think it warrants a headline. Don't forget as well, we've got inflation data out in the UK tonight as well.
Yeah, I was speaking to Paul Bloxham from HSBC yesterday, and he was saying, look, there is the risk too that the RBA doesn't even cut until the Fed is done, and what that could all mean as well, given where inflation is versus the jobs. All right, let's get to the markets today action, having a look at some of the tech players.
I dare say that the scene was set overseas with that ASML fall. That really did some damage. The steepest fall, Juliette, in 26 years, as I know we've been saying probably ad nauseum throughout the day today, but it pulled all the semis down, it pulled the NASDAQ down, it pulled the S&P 500 down. It just kind of soured sentiment because they're talking about weak sales for chips outside of AI.
Yeah. All right, let's have a look at some of the retailers. Morningstar out with an interesting call today on a potential retail rebound. They were looking as well in the food space too, so some of the consumer staples, I guess. But today we saw Harvey Norman, which went ex-div yesterday, up 0.8%.
There's Premier up by 1%. The banks, so the big four banks looking positive. If it weren't for the banks, it would have been a bit worse out there. And Macquarie is the exception to the roll-off by 0.2%. CBA relatively flat. Don't forget the bank's reporting season, ex-CBA, is coming up. And Commonwealth Bank actually had its AGM today.
All right, let's get into the corporate stories. And I think we should also say that really the drags today were coming through from those energy players and the miners. But Rio Tinto today falling in line with those broader miners. Some analysts calling its update disappointing.
Yeah, it shipped weaker than expected, 84.5 million tons of ore from Pilbara in the third quarter, of which 19% accounted to lower grade, lower margin product called SP10.
Woodside Energy had a good day. It had strong quarterly results, 21% rise in quarterly revenue, but it's leaving the LSE because it's only seeing very minimal trading there.
I thought that was interesting as well. So Evolution Mining is the stock of the day. We'll get more on it later, but it was a pretty strong quarter for production, but also not a bad day to be a gold miner coming out with a positive production report given the price of gold.
And Bank of Queensland doing very well, 18-month high in fact, and that's despite it actually cut its dividend by 17%.
Yeah, cash earnings came in 5% ahead of estimates. Challenger updated on assets under management, 128 billion, up 1% for the quarter.
All right, super retail as well. Oh, we've got quite a lot of stocks to get through today. Okay, corporate regulator investigating the company, the reason for why. 2 former company executives sued it.
Yeah, and Reject Shop, an 8-week high on an upbeat FY25 trading update. It says during the first 15 weeks, total sales growth, comp store sales growth, and gross profit margins were all up.
Aurora fell on soft volumes in Europe. This is the Corsa glass bottles and can maker, saying that the softness in European operations is persisting. Maybe people are recycling.
Yeah, wow. And Pro Medicus off by 1.7%. Interesting, because this is a real market darling. It did sign a 5-year contract extension worth $32 million in Australia. But still not enough to lift its share price, but that's a pretty exy price tag, I gotta say, for Pro Medicus there at $186.14 to end the day.
All right, Mark Gardner is our Wednesday guest, as always, CEO of MPC Markets. Great to see you.
Hello.
Where would you like to start? Maybe having a look at what we saw from ASML.
Yeah, look, I mean, they're the major supplier, well, they're the only supplier to NVIDIA's high end, so obviously NVIDIA got dragged back as well. TSMC's tomorrow, I think, with some updates. So, look, if that sentiment starts to turn around, I don't think there's a long-term drag on that sector necessarily. I think it's more the market being, pricing in beyond Goldilocks sort of scenarios for a lot of these companies. Interestingly, 2 stocks on our similar market darling, Pro Medicus and WiseTech particularly, really close to trailing stops for a trim here. We've been trying to let them run for clients who've got that on, but those really over. Pro Medicus I thought was really interesting. A small announcement like that 4 or 5 months ago would have seen the stock up 10%.
Yeah.
I was really surprised to see that down today. So it may be just running out of fresh buyers at $187 price target. So. And WiseTech as well. Obviously, very rarely do they ever get bad press, and Richard White's in the news and all that sort of thing. So, and that extended valuation sort of just takes even just a slight breeze to knock them over a little bit. So, I think around these record heights is it's not bad, not a bad place with a trailing stop to be taking some of those off. And I think same for the US markets. If that outlook on demand for chips, particularly TSMC and ASML, they might just start to see some knock-on selling and take that premium out of some of the bigger chip stocks in the US as well. Which is, Nvidia is really holding the market up quite well at the moment, and has had probably a 25% rally in the last couple of weeks. Really, I think only so. Even if we pull back, we're only pulling back to where we were.
I was going to say, should we be surprised by this?
No. But they've got earnings coming up. Obviously the banks have done well this time around. I'm surprised that Macquarie was the only laggard today.
Yeah, because the US banks that reported did well.
Yeah, and particularly Goldman's is kind of, there's always been compared to Macquarie, and they knocked it out of the park. Mm-hmm. So, and I think we've got a couple of the healthcare names for the rest of this week. I think we've only got Netflix, but I haven't heard too many people talk about Netflix for a while. So I think the main focus will be the following couple of weeks with those Microsoft, Google, Meta, Nvidia and things. Well, Nvidia's further down the line, but those, probably the top 4 of the Mag 7 could really send sentiment, either way, who knows. But I think the election, we're just on hold for the election, which the problem our RBA has is that our election's not, for a while, and you can see the pretty irrational spending that's being proposed already. It's not going to help the RBA make any decisions anytime soon, which is a shame.
Well, speaking of, we've got the jobs number tomorrow. It's always so volatile, but that is part of the RBA's mandate as well, employment. So what do you think that's going to mean?
It has been super volatile lately. I think that the unemployment rate's been has been pretty well consistently picked. But further to Nadine's point earlier, go and watch Scuddy's bit from earlier. I saw that today. It's a really good explainer of what to look out for that number tomorrow. I don't think I could probably add too much extra quality to that commentary. So go and have a look at that. It's a pretty good explanation of it all.
Mm-hmm. So elsewhere, we're watching a lot of enthusiasm for gold come through.
Yep.
We've had a number of guests talking to us about opportunities in the gold space. Where do you look?
I look at.
You look at wherever Jonathan tells you.
Wherever Jonathan is.
He's our gold guy.
I walked into that one, didn't I, Jules?
No, but look, we've been long for quite a while, based on his conviction on those trades. I mean, we've trimmed Northern Star recently, very small amount. So yeah, I think it's just going to keep going, and the closer we get, I mean, once this election gets done and dusted, I think the real rule is going to be people are going to start taking a really close eye at that US debt problem, which I think probably pushes something like gold even higher again. So. At the moment there is really no reason to be getting out, and particularly it was a chart I brought probably 4 or 5 months ago where the gold price versus what the gold miners was at almost record divergence basically. So I'm not surprised at all to see these gold companies starting to play catch up, because particularly in Aussie dollar terms, and they're basically doubling their money, a lot of these quality operators. So we've trimmed, and we've still probably got 12% plus in gold and silver across the board here at the moment, and done pretty well out of it overall.
Yeah. Where else? I mean, we talk about gold so much. I'm just looking at my market map. We've touched on the tech a little bit. What are you sort of thinking about some of the consumer stocks when we say Morningstar says retail could rebound? There's all these thoughts as well about QSRs. I know you had a conversation today about Collins Foods. Yeah.
Yeah, it's not a space we're in at the moment. Even if it rebounds, I think they're priced at rebound prices already. Yeah. So I disagree with Morningstar's analysis there, to be honest. But it's just, you want to be getting something, particularly when we're looking at an easing cycle. If they manage to nail that soft landing, and if we manage to nail a soft landing, they're probably still around about fair value, to be honest. And you'd be going back to the quality retailers straight away. Consumer staples wise, we recently, after doing a trip, we're pretty happy with the ag stocks, more so GrainCorp, and then a little bit of Elders as well. So and they're continuing to get fairly good conditions out there, and harvest has gone very well. So that's where we're sitting at the moment. And then potentially once this poor sentiment against the two big supermarkets goes away, but I mean Woolworths is looking really good price at the moment, I've got to say, but we're largely just waiting for the technicals to stable before we start to jump back into that one. But we've already had that and taken it off at a point this year, and I think that sort of thing will die down eventually. So probably more defensive consumer at this point, and that's just a bit of a long-term macro view rather than a company view. But obviously, your JB Hi-Fis, Lovisa is one that when clients are still holding and we're just risk managing, but you can't fight momentum at the moment. But it's something you've got to be wary at high valuations. If we do have a softening in the global economy, that those will probably get hit hardest and hit first. So it's not really a risk at these levels we want to be taking on at the moment. Not to say they're not good companies, it's just they're a little bit pricey for us for now.
All right. So tonight might be a bit quieter. ASML really bringing forward those results in conjunction with President Joe Biden saying that they're looking to cap sales of NVIDIA chips to the Middle East. Like, that injected a lot of spice into the overnight session. Also, oil prices down 7% so far this week. It's pretty punchy.
I think we covered that. When those Middle East conflicts have kicked off, sort of 8 or 9 of the last 10 occasions that's happened, the moves happened before the bombs have dropped or the missiles have been fired, and then it's generally drifted off about 10 to 15%, which is sort of starting to see unfold a little bit at the moment. I'm pretty surprised that oil's lower, particularly with the hurricane in the Gulf, cutting off a number of different suppliers. But but I think that China, the market wants more specific details on that China stimulus. I think the amount will eventually get there overall, but I don't think it's the bazooka that everyone, that sort of just throwing money at the problem. I think they're going to be a lot more targeted and a lot more sensible in delivering it, which I think's much better for the economy long term.
Just doesn't give us those sugar hits.
No, it doesn't give us the sugar hits. But lately the traders don't. They'll just take their sugar hit on the speculation that it's coming, and then there's the disappointment afterwards.
We always want more, don't we?
Well, Mark, no time to talk Trump. Sorry, that Bloomberg interview was pretty interesting. But I guess we'll thank you for today. Really appreciate your insights.
Cheers.
Thanks, Mark. All right, Mark Gardner from MPC Markets. And of course, we touched on Evolution. That was the stock of the day today. We had Henry Jennings and, of course, his BFF, Andrew Wylant from TP Wealth Advisory.
Nothing at all wrong with this. Jake Klein the chair of this one these days, is a very smooth operator. Management is very good. Those all-in sustaining costs are good. Production is good. And I think to an extent, our gold miners really have been not really believing that we've got gold in Aussie dollar terms, nearly $4,000 an ounce. And when you're pumping it out at $1,400-$1,500, in terms of the margins are pretty huge.
Lots to like about it. Probably the only thing I don't like is the share price. Consensus is about $4.20 odd. It's $4.80 odd. So again, with Henry, it seems to be sort of bouncing off around that $4 mark quite consistently all the way back to 2018. So if it was to go back to $4, I'd be super interested. But certainly given where gold's going and the fundamentals of it, whilst it's going up, keep riding it so it's a hold.
All right, always fun with those two. Let's have a look at the after close leaders. Of course, gold we've been talking about has been a bright spot. Bank of Queensland there as well with its cash earnings above expectations.
Yeah, Regis had its price target lifted 4% by RBC Capital Markets to $2.70, trading at $2.56 today. Genesis Minerals looking good, and Capricorn Metals as well. So theme there, I can see. Let's see if there's a theme in and amongst the laggards. And we've got IDP Education on that list. Don't see any news associated with it. Boss Energy, it found more high-grade drill results at its uranium project, but still lower, off by close to 4%. And Audinate giving back some of the gains it saw over the past couple of days, off by 3.8%.
And looking at the small end of town, Canyon Resources having a good day. It's funny, when I look at the small end of town and it's only a 9% gain, I'm like, what happened today? Titomic was up by 7.4%.
Interesting to see the betting company, Adair's on the list, up by close to 9%. Flipping over to some of the laggards, Atlantic Lithium off by 14%. I was reading some analysis on Reuters, though, today about how Rio's, that Arcadium lithium deal will be inspiring some more takeovers in that lithium space. I guess we will have to wait and see. EQ Resources was also down significantly, 13%, along with Horizon Oil. We talked about that oil price, really steep falls through the overnight period.
Yeah, indeed. All right, let's have a look at what is coming out tonight. CPI in the UK, PPI as well, and retail data. And Canada housing starts.
Hey, well, what we're talking about now, after some unemployment data or some inflation data as well, the inflation data is the most recent data point that's really sort of pushed expectations toward yet another 50 basis point cut coming through, this time from the BOC.
Okay, tomorrow the key thing for us is the key jobs data, of course. We also get NAB quarterly business confidence and the RBA bulletin.
We get quarterlies from BHP, from Santos and Yancoal, AMP and Alcoa, also Auckland Airport, ARB, Treasury Wine Estates and Perpetual Holding AGMs.
All right, well, let's have a look at where the market is tracking. We know it is down, coming off those highs, I guess, that we saw from yesterday. And sorry, I just got caught up on what the RBA bulletin is. So now I've been trying to find out what it is, but they're giving out a paper. It just says bulletin. I wonder what that means.
We will find out tomorrow, but you'll have to watch us. It will inform you as we learn. That's odd. I'm just sort of looking to see if we've got any news coming from, from Europe or from the UK just yet, because oftentimes we do get UK data breaking while we're live here at about 4:20 here in Sydney, for those of you listening to the podcast a little bit later on. But no, not seeing that data coming through yet. What I can tell you is that the S&P,
the
ASX,
time change.
Oh, of course. Yeah, smarty pants. S&P down by 0.4%, 8,284, and E-minis are mildly positive in the US.
All right, that does it for the COB. We'll be back from 9:45 a.m. Eastern tomorrow.
We'll see you then.